Mr. Chair, honourable senators, thank you for the invitation to appear before this committee and for undertaking this important study on access to credit and capital markets for small and medium-sized enterprises. This is an issue that is fundamental to whether Canadian entrepreneurs can build, grow, and stay in Canada. I'm Claudio Rojas, CEO of the National Angel Capital Organization. NACO represents more than 4,000 angel investors and over 100 member organizations across Canada. Our members have invested more than $1.8 billion into over 2,000 Canadian companies. Wealthsimple, Verafin, Hopper, and Kepler Communications each began with an early check from a local angel investor. Together, these four companies are worth over $20 billion US today. They employ thousands of Canadians and serve millions of customers. Innovation-driven firms are a powerful engine of productivity growth. They generate more revenue per employee than the average company. They make other firms more productive. When a Canadian retailer adopts Shopify, that retailer becomes more efficient. The earliest stages of capital determine the growth trajectory of these innovative firms. Canada has the talent and the research base of a knowledge-based economy. What it has not built is the capital architecture to keep companies, their intellectual property, and our founders at home. The consequences are now measurable. Canada's GDP per capita has fallen at 0.4% per year over the past 5 years, the worst performance among the top 50 developed nations. Canadian companies at the earliest stages raise 40% less capital than their US peers. Our top three innovation hubs, Toronto Waterloo, Vancouver, and Montreal, have lost a combined $66 billion US in ecosystem value over the past 5 years, costing Canadians 133,000 fewer high-paying jobs as a result. The trajectory is visible at the founder level as well. The US is producing 45 times more high-potential startups than Canada, and only 1 in 3 Canadian-founded startups are still being founded here at home. Access to risk capital is the single most powerful determinant of growth trajectory, and that trajectory is defined at the earliest stages of company formation. Angel investors bring something that institutional capital does not. They are hyper-local and bring patient capital, mentorship, and domain expertise at the critical early stage of the growth journey. International experience is instructive. The UK, through its Enterprise Investment Scheme, EIS, has mobilized over £33 billion in private investment towards British early stage and growth stage companies. Leading economies are making deliberate choices to address the early stage within a national strategy. Canada has not made that choice yet. Global competition for high potential founders is accelerating. Without bold action to address gaps at all stages, Canada risks losing its talent, companies, and economic sovereignty. 3 areas require urgent attention. First, Canada must resource the front end of the capital continuum. Angel investors, seed funds, and the networks that support them need the scale and capacity to consistently fund Canadian companies at the earliest stages. When one check, one mentor, and one local network can determine whether a company stays in Canada or moves abroad. Second, Canada must treat the capital life cycle as a connected system. Early stage investment, growth capital, and the liquidity that comes from institutional investors are sequential stages, not separate ones. A weakness at any one stage compounds across the others. Third, Canada must take a more deliberate approach with its tax policy to incentivize private capital participation in the economy of the future, similar to leading jurisdictions like the United Kingdom. Canada's innovation outcomes are decided at the earliest stages of company formation. If we get that right, the rest of the capital continuum has a solid foundation to build on. If we don't, no amount of growth stage capital can compensate. Thank you. I look forward to the committee's questions.
I want to concentrate on procurement, and specifically government procurement, and what can the government do in terms of its own procurement policies to prioritize SMEs that possess innovative solutions or intellectual property that can stimulate demand and enhance the credit availability for SMEs, because at the end of the day, if you have a purchase order in one hand, financing is available on the other hand. So, and given that the government is the largest purchaser of goods in this country, what more can they do?
Angel-backed companies have been validated by the private sector. These companies have a higher propensity to service the government as a vendor. And so our recommendation would be that in addition to prioritizing and ensuring that Canadian companies are the beneficiaries of procurement, that the government look for ways to accelerate the procurement process in order to minimize the administrative burden and look to the private sector where it has already validated these companies and is already supporting them.
Thank you.
I just have one
Yeah,
follow-up.
you have time.
I'll throw it open to both of you. Staying on bank for a minute, if you're a startup or an SME, maybe not so much the M's as the S's, is you're not going to get bank support without putting your house on the line. Whereas I will always say to startups, like, equity's the way, because there's no call on it if you get bumps in the road. So do you want to comment on the debt side versus the equity side of the equation for startups?
I can comment on some years ago, we partnered with one of the large national banks on a credit product in which they relied on our network as a validation mechanism. And so if a startup had raised capital from a qualified angel investor within our national network, then beyond a certain threshold, then the bank would forego the personal guarantee. So we are seeing an attempt to address these issues. However, the level of support isn't at the stage in which it will enable companies to, in this country, to be as competitive as they would be if they had the support of an SME-focused bank with a higher risk profile.
Short question, follow one. Over to you, Mr. Rojas. On your list of 3 points, your last point was a more desirable approach on tax policy, and you referenced the UK and the EIS. Can you tell me a little bit more about the EIS, and then maybe your top couple tax policies? And we've heard many, but we want to keep on reinforcing from various sectors what people think about it.
So as a starting point, I think what we can take from the EIS system is that it is a system. It incorporates companies, it's mindful of companies at each stage of the capital pipeline. And so within EIS, there is also a seed enterprise investment scheme that recognizes the higher risk profile of seed stage companies. EIS itself provides 30% tax relief. So in this country, it would be the equivalent of a 30% national investment tax credit. SEIS, so companies with a higher risk profile, receive a 50% tax relief to the investor, I should be clear. And then in addition to the investment tax credit, which within our frameworks mobilizes new supply of capital into the ecosystem, it mobilizes new investors. There are also, there's capital gains deferral for when an individual exits an investment from another sector and puts that money into British-based companies. And there's also capital gains exemption, which is quite powerful. It sends a very clear signal that if you invest in these companies that drive the economic growth of the future, that you don't have to worry about the capital gains component at the end. And the reason why all of this is important is because it corrects for the ultra high risk, the risk of losing the entirety of your capital when you are an investor. So it corrects for a market failure, and that's why a tax policy, it should not be a silver bullet. It should be a comprehensive system that understands the full capital continuum and the risks at all stages.
Thank you, Senator. Moving now to Senator Deakin for 5 minutes, to be followed by Senator Cinco. Senator.
Should we be focusing on companies that, I mean, the CCI has got a definition of the types of companies that we really need to focus on. Maybe I'll go to you, Mr. Rojas, to add into this. I just want to know what are the companies themselves that we should be making sure the policies move the needle on so we can measure the effect. Because right now, those companies are leaving the country. So let's describe them so that we can start to get that relationship built. We know who to invite to the table and get government to pay attention to.
I just will say, and sorry to jump in, I used to have, for many prime ministers, a direct line that they would call me back that day was much smaller. The orientation to the companies was, and everyone was growing fast. And that has died, essentially, at some era over our time here. And so I just think if you cut off your pipeline of relating, you're not going to find the gems.
It's critical that we let the private sector lead. The private sector can see things that others don't. There's idiosyncratic value to be captured by these high growth companies that quite often it's not it can't be perceived by government. And so I'll give you an example. Wealthsimple raised Wealthsimple in 2014 was looking to compete with the large banks. Most people would not think that is something that could succeed. Our Angel Investor of the Year wrote a $250,000 check into Wealthsimple. They now have $100 billion in assets under administration. They raised capital across the full pipeline, and they have a value of US $10 billion. That is not something that government would have determined in advance, but the private sector can. My co-panelist here similarly did something extraordinary when he wrote a $114,000 check into a company with a team of engineers and took that company to a level in which they became a global behemoth and made Canada proud, and even the US president couldn't part ways with his BlackBerry. That is not something that that government is positioned to see in advance. It's idiosyncratic, and it represents the idiosyncratic nature of entrepreneurs that are building something different and of the angel investors that can back them.
Thank you, Senator. Maybe second round. Senator Cinco, to be followed by Senator Lefreda.
Avec Monsieur Rojas. Et j'ai posé cette question à plusieurs reprises à d'autres invités que nous avons eus. Et je souhaiterais peut-être voir la réponse que vous allez me fournir. Mais est-ce qu'il y a des raisons ou des barrières concrètes que le gouvernement devrait tackle, qui concernent les entreprises à propriété féminine? On sait que seulement 4% des femmes entrepreneurs avec des entreprises à taille moyenne, je ne parle même pas des petites, ont de la difficulté à obtenir du capital de risque. D'après vous, quelles sont les raisons ou qu'est-ce qu'on devrait faire pour améliorer cet accès-là au capital de risque?
Merci. The starting point is recognizing that there are barriers. It's system-wide. So we need to address the system, and then to your point around recommendations, we need to look at the steps that we can take that are actionable. I can tell you what we have done. I like the phrase, if you see it, you can be it. And we hear this across a wide range of women entrepreneurs. And so in 2017, we started tracking the number of women angel investors in our network. And it was embarrassing. It was 14%. But if you don't measure it, you can't change it. That number has steadily increased. And over the last 3 years, the number of women angel investors within our network, so our national network of 4,000 angel investors across the country, has been steady in the range of about 35 to 37%. The value that women investors bring is that it creates spaces in which women entrepreneurs feel welcome. It helps overcome things like unconscious bias, which by definition we don't know that we have. And then what it also does, and what we've seen, is that angel investors bring purpose. And women angel investors, in some cases, bring a commitment to take a higher level of risk on women-led companies, recognizing that if you're a women-led company, you have had to overcome many more barriers than your male counterparts.
In qualifying for government support programs, 32%. Donc, sous cet angle-là, d'un meilleur soutien au démarrage des entreprises, mais aussi à la croissance des entreprises, est-ce que vous avez des recommandations à nous formuler pour notre rapport au gouvernement?
Thank you, Mr. Chair. we did root cause analysis. So in partnership with the startup Genome, what we found was compounding gaps. And these compounding gaps are challenges at all stages of the capital pipeline. And it is contributing to the erosion and the loss of companies at all stages in different ways. And so we identified that there's a 30% seed stage gap. So when a company is raising capital in Canada, 30% fewer companies raise that seed stage capital, that early stage capital. This compounds. It has cascading effects. 40% at Series A, so a 40% deficit of companies raising Series A capital. And then that compounds further into a 50% Series B gap. This compounding effect, it creates issues at all stages of the capital pipeline. And the challenge that we have as a country is that we tend to focus on the top floors of a skyscraper, and we don't understand that it's the breadth and the depth of the foundation that determines the magnificence of the structure itself. And as a result, what is occurring is that entrepreneurs are leaving to other jurisdictions, to other countries that do understand that, in which they can gain access to capital at a greater rate. And there's three dimensions to access to capital, and I'll focus on one in particular that tends to be overlooked. We are, and we must continue to be, a nation of builders and risk takers. However, our SMEs spend an extraordinary amount of time with the administrative burden, rather than building their companies, of raising capital, of applying for government programs. The administrative burden is a distraction from company building. So if they do succeed, they end up becoming third or fourth in market if they get to that later stage. And when you're third or fourth in market, it's rational to sell as opposed to being crushed by your competition. There's one company in particular, straight from the founder. They sold their company for $100 million in the West, because if they didn't, they would have been crushed by their competitor. That early exit contributed to the success of something called Harvest Builders, an accelerator in that region that gave rise to Neo Financial, a multi-billion-dollar success story. So exits and liquidity are important. Early exits are suboptimal, and those early exits tend to come from this compounding effect that begins at the earliest stages.
Primarily to you, Mr. Rojas, but Silly, I'm certainly glad to get your input. Democratization of investment. So your angel investors are probably 99.5% accredited investors. But we've heard from earlier witnesses that people are free to invest in cryptocurrency and the markets that project what things are going to happen. They can throw their money around, but securities regulation restricts democratization. And people that want to put small money in just can't get into the system, and probably would be more supportive of nationalistic opportunities as well. We have FTQ in Quebec that is a fund that raises up to $5,000 from workers per year, gets matched with 15% tax credits. How do we democratize a bit more? And do you think that will help bring more capital into the marketplace? Just last point, the recent Strong Canada Fund or whatever is talking about issuing bonds so that people can participate. That's in major projects. We need to get them into SMEs.
Could you?
And to the question related to democratizing access to capital, it's very important that when investors put their capital at risk, that those are well-informed investments. We have a national network of 100 early-stage investment organizations, including angel networks, that help educate new investors so that they can put their money, their capital at risk into companies, qualifying companies, companies that are worthy of that capital and that are likely to succeed. And so we have consulted with the regulators. I did, early in my law career, spent some time in the corporate finance branch on secondment at the Ontario Securities Commission. I can appreciate the challenge that they have of ensuring that they're protecting the integrity of the capital markets and protecting investors. I'm hopeful that we will continue to see the kind of leadership that we have across the regulators around recognizing that the accredited investor exemption is it's a proxy for protecting investors. It assumes a certain level of sophistication, but educating those investors and ensuring that they have the appropriate level of education as it relates to this asset class is important. And I would emphasize that education as it relates to this asset class is not the same as having a CFA charter, which I have, or being a trained lawyer, which I am, or having an MBA from a large business school. This asset class has a very unique dimension to it, and so knowledge sharing, which takes place throughout the angel networks across the country, best practices between angel networks, is the best way to protect investors and to increase access to capital and to democratize this important asset class.
Okay, thank you.
High-value exporters. Well, they're the companies we really want to support, I think, in this country. Right now, there's $4.5 billion being spent through 134 different programs in Ottawa. There's no KPIs associated with those programs. Answer afterwards, if you could, with a written response about what you would do differently in that regard to have it driven by investment and turn that $4.5 billion around into something that we know will have KPIs. Thank you.
My contribution would be ensuring that as we think about these frameworks, we're approaching it from a fulsome perspective. We suffer as a country from silver bullet reasoning, hoping that one thing, one tax mechanism, one particular sector will turn everything around. And there tends to be reactionary policy. There is much that we've learned over the last 35 years as it relates to the development of the innovation economy in other jurisdictions and in this country. We had the labor-sponsored investment funds in the late 90s. We learned one lesson there. Within our framework, we see that as supply of capital that moved into the ecosystem, but we did not have the deployment mechanisms necessary. IP-rich companies, knowledge-based companies, they need capital at the formation stage in order to be globally competitive. And there's a power law that is often overlooked. The government has a desire, governments of all stripes sometimes have an inclination to try to pick winners. That is not possible. You cannot pick the BlackBerry of the future in advance. You can't. Jim did. Many of us would not have been able to. We have to let the private sector lead. We have to let it lead en masse, and it will find the IP, and it will find the companies and the founders and back it with risk capital and surprise us with the Wealthsimples and the BlackBerries and the Hoppers and the Shopifys of the future.
So, Carl, thank you for your time, and we appreciate very much. We will suspend temporarily.